The S&P 500 has been down 3 consecutive weeks and has been down for 6 consecutive days. While this was happening, did you notice that the New York Stock Exchange Composite was down 7 consecutive days? And the last time that it did that was back in 2022. And did you see this? While the S&P 500 lost 0.88% on Friday, the New York Stock Exchange Composite ended its 7 consecutive losing streak and closed up 0.41%. Is the market trying to tell us something? Look at the VIX. You see, the VIX is actually lower on Friday than back here a couple of days ago. So the market participants are still cautious, but that's not as cautious a few days ago. And also the put-call ratio, you see that it came in from the above 1 and came back in to 0.94. So it is slightly below 1. So the market participants are less bearish as when it was a few days ago. And check this out. Look at the up-down volume ratio. The up-down volume ratio was actually 1.8 in favor of the up volume, while the S&P 500 was down 0.88%. And also the daily advance decline, there were almost 1,000 more advancing issue than declining issue, while the S&P 500 was down 0.88%. So what is going on? This doesn't look like we're seeing a positive divergence here between the up-down volume ratio and also a positive divergence between the daily advance decline and the S&P 500. And looking at the New York Stock Exchange new high, new low, we are not seeing the number of stocks making new 52-week low expanding. And looking at the cumulative AD line for the New York Stock Exchange, it's actually ticking up while the S&P 500 is coming down on a closing basis. So all these positive divergence is telling us something. And here looking at the NASDAQ 100, you see the NASDAQ 100 was down over 2% on Friday, but look at the up-down volume ratio, it's only minus 1.1. So it's 1.1 in favor of the down volume. And also look at the daily advance, there's actually a more advancing issue than declining issue, 134 of them. So that doesn't look like these type of internal saying it's a 2% down day for the NASDAQ 100. Because if somebody tell you these, there's a 1.1 minus 1.1 up-down volume ratio and the advance leading decline by 134 stock, you would say, well, we probably get it unchanged or slightly positive on the NASDAQ, on the NASDAQ 100, but one would have guessed it was down 2%. And also looking at the NASDAQ new high, new low, the new low is not really coming up. Look, it's actually lower than a few days ago. It's only 211 stock make new 52-week low. And looking at the cumulative AD line for the NASDAQ, it's actually ticking up while the NASDAQ 100 is moving down. So we're actually seeing a little bit of a short-term positive divergence between the AD line and the NASDAQ 100. So what is going on here, right? Something is not right. Now let's go back and take a look at the New York Stock Exchange Composite. Go back to September of 2022. The last time that this index put in a 7 consecutive down day. We noticed that after that 7 consecutive down day, we actually saw a few consecutive up day, and then it resumed back down for the second leg of the downward move here before it put in a bottom and then start making a reversal and came up, actually put out a new high. So will we see the same thing happening this time around? Well, time will tell, but certainly right now the internal seems to indicate that we could be due for a dead cat bounce. And if we go back to September 2022 on the S&P 500, we notice a similar type of dead cat bounce also occurred before it made a second leg down. So maybe we could see a little bit of a reversal, get a bounce in the coming week. So let's go and take a deeper look at what's causing the Friday's decline. And here we notice on the 11th sector in the S&P 500, notice the technology sector was down a whopping 2.06%. It was the worst performer, and followed by communication, minus 1.1%. If we look at the other sector that is not in the S&P 500, and notice the semiconductor sector was down over 4.5%. It was actually down 4.52%. If we look at some of these FANG stock and the mega cap tech stock here, notice Supermicro was down 23% on Friday, with NVIDIA following with a 10% down, and also Netflix post-earning it down a little bit over 9%, and AMD with almost 5.5%, or Facebook or Meta 4.13%. Even Amazon is down 2.5%, And here Tesla is only down 1.9%, which is better when you compare to the other guys up here, these semiconductor stocks. And also Microsoft down 1.27%, Google 1.25%, along with Apple almost 1.25%. So we see that is the mega tech and also these FANG stock, specifically these semiconductor stock, is hammering the NASDAQ and dragging down the S&P 500 on Friday. And that's where we see a lot of these disparity and a positive divergence, the divergence between the internals and the indexes. And if we look at the heat map for the S&P 500, we notice that only these mega cap is down and the semiconductors here. A lot of stock that is in the green here, right? We have the consumer stable, utility, real estate, energy, financial. So only on these tech stock and some of the semiconductor and also this Amazon categorized in the consumer discretionary along with Tesla, but mostly is these guys here. And if we look at the small cap, the Russell 2000, we also see mostly is green, except the super micro, which will move to the S&P 500 relatively soon. So it will be coming off the Russell 2000. But if you look at this heat map here, it is not that bad of a day on Friday. And it shows us that due to internal, right? It's only the mega cap, the FANG stock, that is dragging down the S&P 500 because it's heavily weighted by those FANG stock. Likewise, the NASDAQ 100. So starting next week, we're going to see some of these FANG stocks start reporting earnings. And if there are any negative surprise, it will likely cause the sell-off of these stock and most likely will continue to drag the index down. But if the internal is pointing to a positive bounce, maybe the market might have already discounted some of these possible negative reaction or negative reporting stuff from the FANG stock or the megatech stock that is going to be reporting earnings in the coming week or so. So let's take a look at what we might expect for the coming week in terms of price action. And just looking at the SPY, the ETF for the S&P 500, we notice that the market is pricing in for the upper range for the coming week is 506 and 504.40, and then the low range is 485.90 and 483.50. Now notice I have marked off this area here, this balance area. Basically, I'm looking for the price to continue to chop inside of this area. And if we do get a, let's say, for example, if we get a little bit of a dead cat bounce next week, maybe we could come up here and possibly even might move to and maybe come up and test this trend line here and then get a push back down. And this would be our second leg of this move here. Now, if we measure this move here and from the peak here down to this area, we are basically looking about an 8% pullback. So that is very typical of a pullback. So it's nothing new, right? And also, in addition to that, we could look at the possibility of coming up here, and that is basically a just a little bit of a 0.68 if you do a little bit of a Fibonacci retracement here. So here I got the Fibonacci retracement here, and if we are looking at a possible bounce, we come up to this 50% or possibly the 618 over here, and that would be 512 and 510 area. So that's within this area here if it move up above the upper range for the expected move. Now, if you'd like to see a little bit more detailed analysis of the SPY on a daily basis or the level that I'm watching, but go check out my newsletter at Substack, because I do publish a daily trade plan for the SPY and also the ES, the E-mini S&P 500. So go check that out. And also, if you'd like to look at the individual sector in the S&P 500 and also the other sectors such as the semiconductor, biotech, the retail, the home builder, go and check out my Substack newsletter. I have a post there that I post the chart for these sectors. So as you can see, last week, the especially on Friday, the this pullback is mainly due to these sell-off on the mega cap tech stock and the semiconductor stock that they've been running a little bit in a euphoric type of state in the last month or so. So right now, it's just kind of pulling back a little bit and dragging the S&P 500 and the NASDAQ 100 down a bit. I don't believe that we are in a major correction or a crash that some people have been proclaiming, because we're still looking for a new high after this pullback is over. And I have mentioned why I believe that we're still expecting the S&P 500 to make a new high. in the last video and previous video. So if you want to know what that is, go and watch that video. I'm not going to repeat it here. If you find this video to be informative, be sure to smash the thumbs up, give it a like, and if you are new to this channel, subscribe to this channel to help support this channel. Thank you for watching and good luck on your trading.